welcome everyone. Certainly excited to be hosting this panel on the Indian impact investing ecosystem, and very excited that we have an all-star panel here that is a diverse group that represents the investing, lending, and entrepreneurial community. And in fact, all of the panelists on stage are entrepreneurs, even if they are investors and lenders as well. I'll briefly introduce the panel first. We have Dr. Gayatri Vasudevan on my right. She, of course, is the CEO of LaborNet, a fantastic company that is really helping, kind of skill and educate and provide employment for a very, very large number of people. We also I'm very pleased to have Pavitra YS. Pavitra is the founder and runs Vindia, which is certainly also one of the very most impactful companies that you could ever find anywhere in the world, and has really transformed many thousands of lives very directly in a way that's highly unusual, and she'll share more on that. Very pleased as well to have Dr. Rajiv Lal. Rajiv is of course the founder and runs IDFC Bank. He's a veteran in the finance industry, including in the impact investment industry, is one of the co-founders of Lok Capital, amongst many other things. And very pleased as well to have Dr. Ritu Verma. Ritu is a physicist who's now turned impact investor, and so it runs Anchor Capital, one of the leading early stage impact investment firms. I think as probably most of you know, if you've traveled all the way here to Delhi from wherever you are, India is very much at the center of the impact investing universe. It's I think everywhere you turn in India, you're going to find hardworking, smart entrepreneur, many of them who are trying to tackle a lot of very large problems. Of course, you also have a very large, young, hardworking workforce looking to work their way up the economic ladder. And then you have at the same time these massive problems across different sectors, across healthcare, education, financial services, energy, employment, etc., that really require significant solutions to overcome what are large problems. A lot of progress has been made, but of course much more needs to do so. For those of you who don't know, I'm Eric Savage. I run a company called Unitas Capital. You may think I'm an odd choice for moderating the Indian impact ecosystem discussion, but I assure you I'm a light-skinned Indian, having been here for the last 11 years living in Bangalore. The Unitas Capital, the firm I help lead, is an impact-focused investment bank. We work on behalf of impactful companies and entrepreneurs to raise capital. We've raised a couple $2 billion for different impactful companies. And I think the Indian impact investing ecosystem is obviously, I think it is leading the world in a lot of ways, and we've seen that's been demonstrated by the capital that's come in. You've seen a number of companies grow quite well. The last few years, we've had multiple IPOs of different impactful companies. Companies like Bandhan Bank, which started off as a microfinance institution, continues to focus on that client segment, has done extraordinarily well. There are others like Narayana Hridaya, who is a hospital that focuses on providing very affordable, world-class healthcare services, that also did a listing a couple years ago. There's of course been many others in the financial services sector. So on this panel today, we want to talk about where we are as a sector, and then some of the exciting things that are happening or need to happen. So the structure today is I'll let each of the panelists give a couple-minute opening statement. Then we'll discuss a few key hot topics amongst the panel, and we'll leave around 15-20 minutes for Q&A for questions from the audience. So with that, I'll get out of the way and ask each of the panelists if you want to give a brief opening statement. Gayatri, you want to kick off?
Yeah. So I think Eric was instrumental in putting Bangalore as a majority. So Pavitra, Eric and me are all three from Bangalore. So I run a firm called LaborNet. So LaborNet is, our tagline is enabling livelihood. So essentially we do vocational education, link it up with employment and entrepreneurship. In the last 7 years, we've scaled considerably. We work in about 12 sectors, and we've impacted about 700,000 people across the country. We work in schools where we provide vocational education to 9, 10, 11, 12 children as a subject. We do embedded embedded bachelors. So we start with apprenticeship and take them to bachelors. And then we have on-site training, which is in the hard sectors, particularly those who will not come to training. We also, about 2 years back, we started a staffing company, and we have 13,000 people in the manufacturing who, particularly welders, CNC operators and fitters, who we give to MSMEs. And that's something that we're scaling up. So training at the back end and providing it as on a staffing roles. We also have entrepreneurship, where we're looking to incubate about 100,000, 1 lakh entrepreneurs, basically to see that they can come between 10 lakh to 25 lakhs revenue. Today, LaborNet has scaled from a 30 lakh revenue company to about 100 crore revenue company in the last, as I said, between 2012 and now. So from our perspective, we feel that we need to scale 10 times more if we are to contribute about 0.07% of India's GDP. And that's really the measure for us, which means that each person who comes into our system should earn a minimum of 20,000 rupees per month in the year 2022-2023. So that's in a nutshell what we do.
Hello. A very good afternoon. I'm Pavitra. I am the founder of an organization called Vindhya. Vindhya is a BPO which works very professionally and also try to create an impact by employing majority people with disabilities. And Vindhya is basically a platform for people who have never got an opportunity in life to prove themselves. So Vindhya started 12 years ago with the idea of bringing business and impact together. So we started with 2 people, and today we are a 1,800 people organization based out of Bangalore and Hyderabad. And we also work across 40 different locations in our customer locations. So idea behind starting Vindhya was there's been a lot of opportunities which was there in the market, but when we looked at people with very less skill set or less education, there was absolutely no employment or no jobs which they were trying to get. So the concept of self-independence and self-respect and dignity was something which they were only looking forward for. The moment we talk about people with disabilities, primarily the questions which come up is, are they productive? Can they deliver? And can they deliver in a professional environment? So these are the questions. So we wanted to break that stereotype and say that yes, people with disabilities can also live the life which all of us are living, and still ensure and tell the world that they're as able as anyone else. And Vindhya has been providing services across BFSI sector, IT sector, and all these processes are the most critical processes which has been managed and handled by the people who've been working here. So the question here is, Vindhya has only grown through customer references and never lost a customer in the last 10 years. This itself says that people there are productive, and there are a lot of people who are out there whom we are looking forward to create opportunities. And I really look forward for an inclusive society.
Right. So maybe what I'll do is I'll spend a couple of minutes just giving you a perspective on the wider ecosystem of impact opportunities in India, and then talk a little bit about IDFC Bank and what we are doing. I think it would be no exaggeration to say that the biggest success and proof of concept in impact investing in India has come in financial services. It really started with microfinance, but I think it's extending beyond that. And there are promising opportunities, let's say in the fintech space, which could be very impactful, that present very meaningful and interesting investment opportunities. More broadly though, as you might have heard Rupa Kudva say in the previous session, impact, it's a whole continuum from capital that gives, market returns to returnable capital to less than that. And in that continuum, in financial services, you will now find all three. So when you're talking about market returns in financial services, the whole financial landscape in this country is actually today undergoing a massive transition, which actually you could characterize as a revolution. So there are two things happening. One is that after 40 years of experimentation in what is called financial inclusion, priority sector lending, which is government-mandated allocation of credit for financial inclusion by regulation, by fiat, imposed on all banks, we have come to the conclusion that this approach has by and large failed. And the public sector banks are in the midst of a crisis triggered by other things, where their market share is on the cusp now of what is going to be a secular decline. So there is a huge opportunity for, a growing opportunity for private banks to substitute for public sector banks. And thanks to technology, which is a very important change as well, actually do inclusion in a commercially viable way, hopefully making the whole compliance type of approach to inclusion through mandates inter alia completely irrelevant. So that's the broad context in which financial services and impact investing, come together. And if I could very quickly share with you the experience of IDFC Bank. So IDFC Bank has now been in operation for 36 months. I launched the bank in October 2015. And the history of IDFC has the best and the worst of Indian financial services. IDFC was created as an infrastructure financing platform by government to fund large ticket infrastructure. And about 4 or 5 years ago, I came to the conclusion that infrastructure is going to blow up in the country. And so we should pivot to banking. And because of my own personal interest in microfinance and financial inclusion, I thought, well, can we develop a strategy for the new bank that is largely focused on serving the underserved? So just in 30 months, IDFC Bank has been able to set up 206 mainstream bank branches. We have 415 dedicated business correspondent branches. When we started, we had 140 employees and only 3 branches. Today, we now have 600 branches. We have 3.7 million customers, the acquisition of whom was greatly facilitated by Aadhaar-enabled technology, right? And this customer base, 2/3 of it is rural women, and the 3.7 million customer base is growing at the rate of 150,000 customers a month, okay? And we have a book on the asset side in 30 months of about 12,000 crores, of which 4,000 crores is all rural lending. A lot of it is microfinance. All this has happened or has been made possible because of this broader context of how fast financial services are changing in the country and technology, some regulatory change as well. And I'm hoping that through an acquisition and merger that we are going to complete in the next month, I'm hoping that by next year, the merged bank, the new IDFC Bank, will have close to 8 million customers because the company we are merging with, again, uses technology to reach out to SMEs and micro SMEs. So you could now say that IDFC Bank is actually an impact investing opportunity. That's the tip of the pyramid. But you go down below that, you will find even more interesting opportunities with the combination of risk and return in today's India. So bottom line is, it's not an exaggeration. India is truly, and this is just financial services. I mean, colleagues here have talked about other sectors in impact investing, is truly, I think, going to be, has already become the epicenter for impact investing around the world.
Thanks, Rajiv. So I'm Ritu Verma, and as Eric said, we run a very early stage fund called Ankur Capital. The focus of the fund is to invest in innovative business opportunities for the next billion. So our fund today is invested across primarily agriculture, about 70% of what I would call ag tech and food, and the rest of it is deployed in health and health tech opportunities. So when I say that we're focused on innovation, I really do mean that we are focused on innovation. I think we have companies in our portfolio that are R&D led and high IP, looking to create products that are relevant for the next billion population. We have a lot of tech companies, and again, I think lots of people at the conference, as well as a lot of my co-panelists here, have alluded to the fact that the digitization of India and the digital highways that have gotten built are allowing for cost structures, for newer ways for business to kind of happen. So we are, we work with these innovations, whether they're business model innovations, product innovations, or service innovations, and across these different sectors, and we'll go on to expand to more sectors with our new fund. We're proud to say, of our, one of our most mature companies that we came into about 4.5 years back, where they have worked with about 5,000 farmers, is now close to 3 million farmers in 23 countries, taking a model of impact that was created in India for the Indian ag sector, but seeing and realizing the potential of that to fragmented agriculture globally, and there's a lot of it that is out there. So when people say that India is a lab, we truly see that. We see this in a couple of our other companies who are earlier in their journey of kind of entering other markets, that the solutions that are being developed here actually have a larger market. And so that's the exciting journey that we're on here.
Great. Thank you each for sharing that. You can see, 4 kind of very different perspectives on the Indian impact investing ecosystem. If I were to take a step higher and say that from my perspective at least, what we could really use in the Indian impact investing system is more investors taking more risks. So I think the view that Ritu just shared is in some ways an outlier view. And the investors who are really looking for more pioneering, highly risky investments are in the minority, and they also tend to be investors who are investing limited amounts of capital. And so maybe amongst the panel, if we get different people to share some of the different things that you think should be happening or need to happen in terms of moving the sector forward. I know, Gayatri, we've had some discussions on the need for, kind of once you've raised that initial round of capital, finding investors who will take the risk to move you up to the next level. Do you want to share your thoughts?
I think possibly it's true of every investee company, but I can say for myself, I've struggled to raise each round of funds. It's not been an easy journey. The angel round came in, and then I took, so we did a mix. We did an equity round with a debt because National Skill Development Corporation was giving it at 6%. Then we had Dell Foundation and Acumen come in, and similarly we raised equity debt together. So I've raised 3 rounds of funds till now, and when I want to raise a growth fund now, I find the same questions pretty much there. In spite of having profitability, I think there are issues around sector. I think funds are available in the fintech sector and edtech sector are well funded, but other sectors, which are hard sectors, I think there is still skepticism on sustainability, on profitability, and scale up. I think these are the 3 that I see as issues. So I do feel that you do require, tech along with brick and mortar in order to really change the nature of the country. I don't think one alone will do it, and therefore we require more funds. Particularly, you need, as I said, it all depends on the period of time. Today, I do feel there is a requirement for growth funds, which are there in the impact sector. Is really, I don't see so much growth fund availability there. So I think that's to me a problem that I would say I've faced personally.
Okay. I don't know, Ritu, if you want to comment any on that, and also on what else you think is needed in the market in terms of additional capital sources.
So I completely agree with Gayatri that, we can talk about the capital flows into India, but the financial inclusion sector and the MFI sector and maybe a bit of EdTech has used a lot of that up. The other sectors are still in the impact investment space is pretty nascent. And so you don't really find the growth funders, the next level of funders. So I'll give you an example. I mean, we are in sectors that, I don't have traditional growth guys sitting there in the impact space. Most of our, you brought up that I was a physicist, and I kind of somehow see these flashbacks to doing a physics PhD of you get in hard problem, you have to get out, you have to do that somehow. So, we actually work with, I don't care who, right? So it's across the world, whether it's a semiconductor company in Japan that's somehow interested in what we have invested in, to a US investor who's looking at this from a different lens to a strategic. So what happens is that you end up taking a look at the ecosystem very differently, and I probably end up talking a lot more to funders outside the impact sector, and personally I'd love to see more risk capital flow in. So there's a risk averseness, okay, microfinance was proven, so okay, I'm fine to go after that, right? I mean, and I do understand that, when you put in large money, you need to go after large markets, and you need to see the growth if you're going to follow the venture capital approach. And we're talking about large markets, we're talking about scale that has happened fast, but I still think we need those stars out there to attract this to happen, even in the impact space. And that we should just, all of us together to be working towards creating that in order to be able to attract more risk capital.
Thanks. Certainly you see the same in terms of needing to deepen the market, and obviously
Yeah.
it's quite inefficient to go
The market
chasing one
is
Japanese
broad,
investor.
the depth is not there.
Yeah. Rajiv, do you want to comment on some of the things that you're working on in the market, on the impact bond side, or other things that you think need to happen in the market?
Yeah, so, to your point about going to a higher place, I don't know how many of you heard Al Gore's speech this morning. One of the reasons that people like me are engaged in GSG and the social finance India movement is a belief that capitalism is broken. But that markets are essential, absolutely essential to create prosperity. This is a point I've made repeatedly, but it's worth proselytizing and repeating it yet again. In India, the context is is ironic and very particular, that in India we are at the risk of losing legitimacy for markets even before they've had a chance to take hold, right? Free market economics in India is only 20 years old. And already, because of growing inequality in wealth and so on, and the politics, the very robust politics of our democratic society, the conflict between the need for social justice and market deepening and development is very real. So I personally believe that the sooner all of us and business in this country and investors in this country understand that we have a purpose and a mission and a duty, moral responsibility, ultimately in our own self-interest, that is to preserve markets, to actually think about other than pure financial returns. Unless we do that very quickly in India, we would be in deep trouble. Philanthropy is very nascent in this country. There are tons of very wealthy people. There are tons of not so wealthy people who give for all kinds of things. As now chair of Social Finance India, one of my proselytizing objectives, goals, is to socialize the idea of retailizing philanthropy. It is my belief that people are willing to give, even if they're very small amounts, provided, however, they are given the confidence that what they're giving for has actually delivered a certifiable outcome. So one of the things that we are going to try and do in Social Finance India is to popularize the notion of outcome-based financing. So imagine a world in India where you're telling the district level officer who is using budgetary funds to improve outcomes in primary health and primary education, that if he were to submit himself to a credible platform that provides certifiable measurement of their output, of their outcome, and that platform says to the world that, look, in this district, 100 rupees were spent over the last 3 years on health and education, and this is the outcome they have now delivered. That district should be allowed to issue certificates that any corporate, anybody, should be able to buy and claim credit for having done the equivalent of bona fide philanthropy or CSR. And these investors could be domestic as well as foreign. If we're able to do this, I think we'll be able to unlock a huge amount of capital that will come in to help finance outcomes delivered in key areas where there are market failures, where, no matter how you try, it's difficult to create for-profit models. So that's the vision, what we are trying to do at Social Finance India. It never hurts to be an optimist.
Can I just ask one follow-up on that, Rajiv, if I can? How do you go about implementing that? Obviously, it would take government cooperation at the very latest. What's the process for making something like that a reality? Seems like a great idea, but how does it get implemented?
So it'll require a sustained effort. There are many stakeholders, but the first is to popularize the idea. But you have to operate at multiple levels. I think there is consensus everywhere, especially in government, that government spending needs to become more disciplined, that it must be more outcome-oriented, right? Think of this initiative as a way of incentivizing parts of government to actually deliver outcomes. Because what I'm proposing is that an IAS officer, district commissioner for district X, who's able to show in his or her tenure that he has deployed so many rupees of budgetary resources to deliver these outcomes, is then able to show that he has actually reduced or being able to refinance this budgetary spending because of the outcome that he or she has delivered. I think it's such a powerful incentive to change behavior of these officers. So a lot of conversation with government is clearly is involved to help them innovate. So this is just a suggestion to innovate on incentivization for improving outcomes. That's one axis. The other is, this is not the only initiative. We have to also work the whole, the whole value chain of different kinds of financing. So SIBs and DIBs, social investment bonds, development investment bonds, that market, which is much more technical. There are already some experiments in Rajasthan that are emerging. Build on that experience, try to proliferate that. Then third, invest in market infrastructure for social entrepreneurship, filling in the gaps, to find risk capital of different kinds. To our mind, the big gap now is debt financing as well. So a lot of people are getting access to venture financing, but they're having difficulty raising debt subsequently. So can we help create intermediaries that will facilitate the flow of debt for social entrepreneurship? And that's the idea of the fund that we announced, or the two funds that we announced day before yesterday in this platform. One is the Education's Outcome Fund for India, and the other one is an impact fund, which is focused on raising equity to seed and nurture financial intermediaries to deepen the ecosystem and infrastructure to make debt financing more easily available for social entrepreneurship. So a whole range of initiatives.
Thank you. And Pavitra, as a successful entrepreneur who could probably easily certify that you're having significant impact in terms of your business, what gaps have you found, or what have you found lacking in the Indian impact investing ecosystem? What would improve your experience on the capital side in terms of growing your business?
Well, I think the primary difference is, as we speak, we are kind of looking at only those sectors, which is now the priority sectors. It could be education, it could be microfinance or anything. So some of us who are in a very different or a unique, special sector where, first the business model itself is something people question before even kind of getting engaged. So that's the primary, concern which needs to be addressed. I mean, still we have this question of, even after so many years, and even when you're successful, people come and ask you, are you making profits? Are you a, non-profit organization and all these things? So these are, I think, the larger gaps. And I think once, you have people, we've also raised investment, and, we have also seen great alignment in people, because it is just not the profits which, kind of make you in a social sector. It is more a purpose-driven and a mission-driven, where you kind of measure the impact before profits. So that is something which is very, very key, and which we need to kind of look into. I think once we have that, create a shared value system amongst you and understand, what is the context, and, establish clarity, I think a lot of our gaps, are kind of addressed. And yeah, you need to kind of do good and, also do well. So these are two things which you need to ensure, irrespective of the kind of the organization you work with. So pretty much, today, impact sector is kind of recognizing these special companies and, kind of helping in a very small way, but there is a long, long, long way to go for us to kind of get recognized and, be funded similarly the way other sectors are being funded.
Super. I think with that, we'll start taking some questions from the audience. We have 4 bold clocks here ticking down the time for us, including one in 200-point font over there. And so we've got around 11 minutes left or so, but would be very happy to take questions from the audience for our esteemed panel. I assume we have someone with a microphone here who can help facilitate that. So please raise your hand.
I have a question. When we have an idea and where the idea has not yet manifested. Especially that's the time that people struggle most when it comes to the social impact or developmental project space. Um, by the time you become successful, you have something to show. And the maximum resource crunch is at the time when nothing is yet manifested. So what is your observation and how you worked upon that?
I don't know. Ritu is an early stage investor. Do you want to comment?
I think the entrepreneurs on the panel would have a much better view of how they crunched through these tough times, right?
I don't think there's an easy answer. The first model you have to create. Nobody is going to fund it before you have something. So I think you have to have something to show. Only then can you go to investors is my take. Without anything, I think it's too Bollywood. Doesn't really happen in my opinion.
Yeah, just to add to it, I just keep telling this to my people. Success has many fathers, and people who are trying to reach success are orphans. So you need to find your parents and, make it happen. That's what we have done, and I'm sure you will find one.
I mean, I think it's well known across the world that when you start a company, you raise money from the 3 Fs, from friends, families, and fools. And there are very few fools around, so you really have to rely on your friends and family.
And over 12 companies, I can tell you that somewhere bootstrapped. In India, you also have these award ceremonies that give out money, so all people have used all sorts of different tools to get off ground.
I said it in the morning, but I'm saying it again. You could luck out, like I had an angel investor who I met at Sankalp, and therefore it happened. But even then there was a sort of model coming in. Even if it was a seedling, but I wouldn't want to call her a fool, but but I hope she sees, and at each stage it's difficult.
Hi everyone, thanks for the great discussion. I run an investment management firm in Canada working for a family office and a foundation, and there is a growing interest about investing in India, both from impact and return perspective. I'm from India, so that's why I'm here and see the potential. So what would be any top 3 suggestions or thoughts that you would like to share with a potential overseas investor who's thinking of investing in India? Thank you.
So I would say that you kind of need to look deeper. You've got to figure out which micro areas that you are interested in as a macro story. Yes, India is a great story and it will happen, but I think you have to look a bit deeper into what are your investment themes, what is it, that you see. I think execution and scaling in India is still a journey. It's a journey, so by looking at macro numbers, extrapolating growth, I think is not how it works. So I think there's a lot of homework and there's a lot of on-ground work. So we work with 12 companies, and so across the board, across various different geographies, various different kinds of companies, and across the board, there are a bunch of challenges that we see that are themes that kind of emerge, talent being the primary one here. I will put that even higher than I will put capital. And because without the right people, it's really, really difficult to grow an organization. So I think picking the areas, picking what your thesis is pretty important. So it's not, there is no substitute to going down that journey.
I think we have a question here in the front.
Thank you, panel. I represent IIC, an industry body created by the ecosystem players of impact investing, and most of you on the panel know us. We are trying to reach a point where impact investing becomes the future of all investments in India. How, according to you, can we involve the population of India become a part of this revolution? And when I say population, I mean the common man, the office goer 9 to 5. Thank you.
So as an industry association, you must get engaged in this whole outcome bond crusade and help popularize this notion. And that's an introduction then to impact outcome-based giving that then leads to impact outcome-based and linked to investing. So as your CSR activity of the IIC, you help us retailize philanthropy.
I would just add to that you know, there are retail platforms across the world that work to varying degrees, but one of them is, you know, kind of a P2P lending platform. Of course, the regulations in India have not been very constructive in terms of allowing the P2P industry in India to grow, but it is something where there are lots of models across the world where you've seen the so-called common person, you know, actively participating and providing funds to others who are starting up businesses and doing things that are often, you know, quite impactful. And, you know, similarly, you could have impact-focused, you know, mutual funds or ETFs or other types of structures that will require working with the very large players, with banks and with, you know, with the big investment houses to create this product. So I think it is very important for IAC and all of us to engage with those players who really can do the mass retail play.
Thank you for a good discussion. Dr. Rajiv, you mentioned that there's a gap for debt in the market that you see. Could you elaborate on that? Perhaps let us know what is the type of debt that you see lacking? Is it long-term debt, working capital finance?
No, my sense is that it is both, but more important, it's the long-term debt that is not readily available in the market for a lot of entities that have raised some equity, but now need to build out the business a little more without having to deal with the intensity of engagement that equity raising requires. So there can be, there are a lot of business models that we see in the social entrepreneurship space that can work on long-term debt. I'll give you an example. So because there's a whole range, but this example really sticks in my head. You take something like, what is it called, the Netralaya? Shankar Netralaya, or a trust like that. Now, the financial business model for Shankar Netralaya is really a cross-subsidy model. So what they do is they will charge for cataract surgeries for people who can afford it, and the profits they make from that, they provide surgeries for free for those who can't afford it. Now, this organization can grow dramatically, and the cash flows of this organization are very well proven. They don't have access to any kind of capital, but some kind of debt instrument would be perfect for them. So this is one example. There are many others, you know, different kinds of businesses. So what I see is a big opportunity if we want to deepen social entrepreneurship in this country, is to move beyond just venture debt, but also explore these kinds of. There's another kind of opportunity, could be credit enhancement. So IFMR and Northern Arc have been doing this, but this could be done at much greater scale. Can we provide credit enhancement for NBFCs that are providing debt to social entrepreneurs? The idea being to help distribute the risk of lending to these NBFCs wider amongst the community of institutional investors in this country, but in parallel also reduce the cost of borrowing to the ultimate user of that debt. I don't know, Eric, you might have some views on this. You must.
No, I think you covered it well. Thanks. So I think that we're about out of time. If you have a quick question, please go ahead.
So, my name is Rajan Makijani, and I was the process evaluator for the first development impact bond with Educate Girls as a part of Dalberg. So, I have a quick question and an observation, first specific and then general. How are perverse incentives being thought of? You know, the great news is that we are beginning to measure outcomes, which is great, it holds us to account. But for example, in the Educate Girls DIB, if what I'm going to be measured against is learning outcomes, enrollment, and so on, I mean, as an on-ground entity, I know that if I have more enrollment and focus on the higher caste children, they are likely not to drop out of school and so on. But if I go to the lower castes, then I'm frankly just increasing my own risk. So one caution point and how that's being really thought through is the question of the closer we go to market-based mechanisms, outcomes, measurements, and quantitative metrics, how do we ensure broadly that we don't become people that stick to the letter but not the spirit? So that's number one. And the second one, as a broader extension of that, is it's beautiful that we have this impact investing conference and so on. But I sometimes wonder if, apart from service provisioning like education, health, etc., is the sector going to lose focus on more controversial topics like the tribals, the minorities, religious minorities, the really marginalized and so on, which are hot potatoes. And so whether there's going to be enough space to look after those as well. How do we again, so the question is the same, how do we again remain in the spirit of service to society that actually delivers to the last man, not just to the closest possible that I can quickly deliver and get my outcome done?
Very quickly on the first part of your question, I mean, this will be, anytime a new product comes into the market, there'll be associated challenges and problems. So I think now the buzz in our community is greenwashing or impact washing. So, you get mainstream private equities raising all kinds of funds, advertising them as impact funds, but are they really impact? So the measurement of impact, the sooner we get consensus, generally acceptable standards for what impact is and how it is measured, that's a huge, huge priority for keeping all of us honest. And that's going to be a big effort, but we really have to engage in it. On your second one, I doubt if tribals would like to be called hot potatoes, but not to be facetious about it, as you and I were discussing yesterday, let us be clear that there are some activities that only government can do. This is very important to understand, because there's a belief amongst a lot of people in our community as well that government can't do it, therefore let's get impact investors and social entrepreneurs, they will solve the world's problems. We can't solve all the problems. The reality is we need government. And so I want also to change the focus and have a discussion and debate on what we can do to help improve the performance of government where government is the only mechanism to solve the problem.
Great. So I think that we're just about out of time. I'll give each of the panelists a last word, if you will. So if you have 30 seconds on anything else you'd want to share with the audience as they travel back across the world in thinking about us here in India. Gayatri, you want to go?
So I think I agree with Rajiv on this, that we shouldn't attempt to solve all problems. We cannot solve, I believe that social enterprises cannot solve very deep social issues. I think that's not, and the state is good to do it. I think the government is coming up and is thinking of a lot of different instruments today. It is for us to work closely with the state to look at those problems. There are avenues for social enterprises. I think we need various financial instruments. We have receivable financing, working capital financing, long-term debt, equity. All we need to look at various products which are there. Today, I think there's a real shortage when we think of the products that are there for social enterprises.
Yeah, I think one, allow people to do what they do, and integration is something which is going to definitely help when people come together and try to address an issue. I'm sure there's a lot of change which we can expect. And I think for social enterprises, the primary is let's kind of focus on the purpose and the mission which we have started, and not do a mission drift, which will not make you part of this sector. And I'm sure there's a lot of support and help which is pouring in the future, and there's so much of impact we're going to make together. Thank you.
I think one message that I'd like all of you to carry is that given the size of India and its importance and place in this whole business of impact investing, it is vital that India succeed in this experiment. So we need all the help that we can get to make it a success in India. If it fails in India, it'll be terrible for the movement globally. So let's just join the movement, help us make it a success here. If we are able to do that, it'll sell itself to the world.
So I think India is at a very exciting time. We've always had a lot of people, and hence the attractiveness for the impact sector. But in addition to the number of people, I think there are many other factors that over the last 3-4 years that have come into play. We've spoken about digital, there's talent, there is even money. So I think all of those factors actually make this an extremely attractive place to sort of create those models, if you like, that can be grown and adopted globally. So that would be my last word on that.
Excellent. Well, with that, I'd like to certainly thank the panelists. Appreciate very much you spending your time traveling here and sharing your insights. I think as it was highlighted on the panel, there's a lot of exciting things going on in India. There's a need for even much more because the problems and challenges are very real, and these aren't challenges that are going to solve themselves. So I think as was highlighted, there's both a need in terms of all these impact sectors, as well as I think as Rajiv rightly pointed out at the beginning, there's a risk to the capital market system here if we don't focus on these problems and don't use market solutions to solve these challenges. And clearly, these things aren't going to just happen on their own. It's going to take all of us working together. And lastly, certainly thank you to the audience. I appreciate you being patient with us and actively participating in the discussion. So thank you all.
Thank you, the chair.